All right, everybody. I've got a good one for you today. We are going to actually optimize the revenue for Microsoft. Okay, we're going to import some data from yahoofinance.com, and I have a couple videos about screen scraping and importing data from the web. This is the website right here, and if you look at the Microsoft revenue statement, we see all the line items over here, okay? And this is pretty nice because you can substitute the ticker symbol Microsoft for anything. That here is Starbucks, okay? Here is Amazon.com, Inc., Amazon Inc., right? So incorporated, and you can just swap out these ticker symbols. What for Apple, you can do Apple AAPL, right? And get the revenue statement for it for any publicly traded firm, right? So all these firms by GAAP accounting standards, and they have to report everything fairly and correctly and accurately for all the Wall Street reporting, right? So we're going to look at Microsoft in just a minute. Why would we even do this kind of thing, right? So that's a good question. Why would we analyze a revenue statement and all the line items in that revenue statement, and why would we even optimize it, right? There's a bunch of reasons that this can be beneficial for us. Revenue drives profits, right? Both directly and indirectly. More revenue you make, the more profit you make, okay? But it could cost money to make that revenue too, right? So we have total revenue here. This is the first line item, cost of revenue. So this is sort of COGS, cost of goods sold, or cost of revenue, cost to produce the revenue. This is people's salaries. This is electricity for all the computers at Microsoft, keeping the lights on, whatever kind of administration costs that they have to pay. It's all wrapped up into cost of revenue, and then you have the gross profit, right? So you have the total revenue, subtract out how much it costs you to produce that revenue, and then you have the gross profit, and then you start subtracting amounts from this gross profit to get to the net profit. So we have pre-tax income, we have some operating income, operating expenses, operating income, pre-tax income, tax provisions, earnings per share. This is $12.18. So $12.18 per share of stock outstanding. Let me do a quick Google search. How many shares? How shares of Microsoft? Okay, how many shares of Microsoft outstanding? 7 billion. Okay, so this is the EPS is earnings per share. So you would take the earnings, right, divided by 7 billion, and you get that right there. So 90 billion divided by 70 billion. I think we can do this pretty quick. Let me see if I have this thing open. Oh yeah. 7.47, 74. There you get the 747 shares outstanding approximately, and you get 12.11, and then you see 12.18. So it's a little rounding, but it's pretty close. Okay, so there's the earnings per share. So yeah, so we get the revenue both directly and indirectly. That's going to help us grow profits, right? Market share and overall growth of the enterprise. Investor confidence is boosted when you have good revenue, right? When the revenue is strong and consistent and persistent. All the investors, the stockholders have higher confidence. This is a mature company. It can pay dividends to all the shareholders, and it can continue in perpetuity, right? Perpetuity is basically forever. This company can continue forever as it stands now. Now things could change, right? Sometimes businesses go bankrupt, they go out of business for a variety of reasons, but based on what we're seeing right now, based on the current revenues, it's going to continue in perpetuity. Sales driven businesses, right? Everything is sales driven. The more the sales, the more you're earning, right? Scaling up operations. So the revenue, understanding the revenue statement can help us scale up and scale out the operations, scale up and out. Okay, so they can diversify, they can buy businesses. If you have a direct competitor, you could probably buy your competitor. Bill Gates was famous for that in the 90s and the early 2000s, right? Buying out any kind of competition, fixed cost leverage, okay, and preparing for funding for IPOs, okay. Well, that's IPO'd a long time ago, so I don't think that's really a concern with this, but certainly for a non-publicly traded company, right, you want to have strong revenue to they show Wall Street, right? If you're going to do an IPO, you want that to be strong, you want it to be successful, you want that to be crisp and tight. You want a strong IPO, right? So we're going to import some basic libraries right here, and we're going to import this data from that website that I just showed you. So let me hit Control Enter to kick off the process. Run it. We are going to put everything into a data frame and package that pretty nicely. So this opens this browser window right here. Okay, we're going to be screen scraping this 254 million is the start of the data frame, and tax effect of unused items negative 24. These are all in thousands, so 24 billion, right? Because you multiply that by 1,000, so negative 24 billion for unused items for taxes, and 254 billion for gross revenue, right? Gross revenue, right? And then we subtract out some of the costs of doing business, and we get down to the net down here. So this is pretty interesting. I actually did another video on this recently, and I found out that if you click this button over here, you can either expand or contract or compress, whatever the term is, all these line items, right? So if I click this is expanding everything, and if I click that again, this is showing everything, only the higher parent level transactions over here. And if I click on any of these little arrow things over here, it expands all that. So initially I tried to click on all these arrow items, and that wasn't working, but then I found this button over here, expand all, and it worked pretty nicely. It expands everything just like you would expect, right? So that's what this piece of code right here is doing. Expand all, and we are clicking on the button. So it's a button click event. And if I go over here, it's going to be real quick because this video is not about screen scraping. If I go down here and go down here, you can see this is a button right here. And this says over here, I think you have to expand this a little bit. It says expand all. Yeah, right there. So there's the text. So it's a button click event. You have to look for this text right here, expand all, right where my mouse is. And it's going to go ahead and expand that button, and we can collect everything into that data frame. So we start with 254 billion, right? And remember, we had a negative tax event of 24 billion. Okay, so everything is represented in that data frame with 47 rows. This is zero based, right? So we start with 0 and go up to 46 plus 1 because we count the 0, so 47. So everything is in a data frame, and it looks nice. Okay, so at this point, with everything loaded into the data frame and structured very nicely and organized, we are going to look at the total revenue, right? Such as products, services, geographies, segments, everything rolls up into the total revenue. So Microsoft is a international enterprise, right? So they have offices all over the world. They have to collect all the revenue from all the offices, all the sales, all the transactions at all the stores, whether it's online or service agreements with other corporations, Windows licenses, what else? Office, SQL Server, .NET. It's a pretty big reach, right? So Microsoft is everywhere. They have to collect everything and roll that into the total revenue, right? So we're looking at cost analysis. We're looking at how much it costs to produce that revenue, right? Like I said before, you have to pay the developers, you have to pay the administrative costs. You have to pay to keep the lights on in the office. You have to pay for energy for the building, right? You have to pay your salespeople, all this. So there is a cost of doing business, right? We want to understand those costs. And are there any inefficiencies, such as procurement, some kind of supply chain issues, production, delivery processes, right? Supply chain, things like that. So this type of analysis can help us understand the idiosyncrasies of running a massive scale business like this, right? So Microsoft is pretty huge, right? We need to analyze the following: understand key drivers of revenue costs, analyze expense trends that change over time, simulate revenue optimization scenarios. You have simulation analysis, scenario analysis, things like this. I did a video about that. Implement optimization logic in the data frame. That's what we're going to do in just a couple of minutes. You'll see how that works. It's pretty cool. So we want to increase revenue overall. That's the bottom line here. Price optimization, upselling and cross-selling. We want to look at opportunities like that, and market expansion. So how else can we impact the revenue? We can reduce costs, right? What are the costs of revenue? How much does it cost to do business right now? That's literally called the cost of doing business, right? And if we can decrease these expenses, it's also going to help us to boost the revenue, right? So we want to understand operating expenses, selling, marketing, research and development, profitability, profit margins. We want to maximize these, right? Focus on ratios of gross profits to total revenue, right? And any kind of machine learning that we can leverage for this type of analysis is going to be beneficial too, right? So I'm going to go ahead and clean up this data frame. As you can see, there's some commas over here. Okay, we want to get rid of the commas and just make this nice and tight and crisp, and I'll clean up. So 254 billion, and that's cleaned up down to, I think this is 63 billion. If you look over here, it's a little easier to read with the comma. 63,189 billion. But when we start to do any kind of analysis on the data, we don't want these extra characters. We don't want to see millions with an M, billions with a B, or any kind of commas. We just want pure numbers, just raw data. That's what we want to look at. So we're going to look at correlations. Now, this isn't totally necessary. It's more of a fun exercise, and it is not obligatory to do this step, but I think it is beneficial, and we can see why in just a moment. I think this is helpful to do this type of analysis and to look at the data from this perspective. So we're going to go ahead, pivot the data, and then create a correlation matrix right here. So DF underscore pivot dot correlation is going to help us create the correlation plot. And we're going to use a seaborne heat map to go ahead and look at this data. Okay, so anything that's dark blue has a positive 1.0 correlation. Anything that's light yellow has a negative 1.0 correlation. Let me zoom in a little bit. It's a little busy. The numbers, annotations right here. That's what annotation, that's how we get the numbers inside of 50. And we're looking at everything. So this is a whole universe of this revenue statement. So all the line items for Microsoft, right, plotted together, looking at the correlations, but it's a little bit too busy. I'm going to take another view and look at this from a slightly different perspective using a plotly chart. So this will actually give me a bubble popping up. I think it's called a tooltip or something, some kind of pop-up over here, and you can see the details of the correlation. So any light colors is going to be negative correlation. So here you have gain on sale of security and diluted EPS. Here you have diluted average sales and gain on sale of security. And here's another negative, here's another negative. And this one is positive, right? So the gain sales of security and the basic average shares have a high correlation, and a lot of these have actually high correlations. Anything in the diagonal will always be 1.0, but some of these are very interesting. It comes down to, let me see, net income from continuing operations, net minority interest. So those are going to be the same, right? It's the same line item. If I go up here, where is it? Net income, continuous operations. So if I go over here, let's skip back for just a minute. Net income from continuous operations, and then diluted AI available to stockholders. So that's 1.0, right? So that's why these are highly correlated. There's really no breakdown right there. EPS and diluted net income available to common stockholders is going to have zero correlation. There's nothing correlated there, but these four are highly correlated, right? 1.0. So it's pretty interesting to look at that. Why do we even look at these types of things? There's a few reasons, okay? So understanding the relationships of revenue line items, how are they related? How are they correlated? Do they have some type of like predictive capabilities between these line items? If one is highly correlated to another, there's going to be a very strong positive relationship or negative relationship, for that matter, could go either way, right? Identifying key drivers of profitability. So that helps us, this type of correlation analysis helps us understand key drivers, budgeting and forecasting, detecting anomalies and red flags, right? If something looks a little bit askew or something looks just very wrong, that will come out in the correlation analysis. And then basically for strategic decision making, the correlation analysis can help us basically make better long-term planning strategy decisions that are going to help the business and improve the overall process of generating revenue for the next quarter, right? So now we're going to go ahead and use an optimizer. So I apply optimize. We're looking at total revenue, cost of revenue, operating expense, and then gross profit, which is total revenue minus the cost of the revenue, and EBIT, which is gross profit minus operating expenses. and we're trying to maximize the EBIT, okay? And we'll see in just a minute how this works. Let me hit Control Enter to refresh it. And we see the optimized revenue, cost, and expense are these numbers, right? So the optimized revenue is 300 billion. That's for next quarter. We're trying to optimize that. The cost of expenses is 77 billion and expense is 40. So if we go back and look at this, we have 377 and 40. So optimized revenue, we saw last quarter was 254. So according to this model, we can get up to 300 million. So 254 up to 300. So about 46 billion. Sorry, I say million. About 46 billion and increased profit for the next quarter. That's what we can expect. Oh, we can see right here. I'll have to go all the way up there. So 254 to 300. We're looking at a 46 billion increase in revenue. That comes from two places, basically decreasing costs and decreasing expenses. Like I said before, that's exactly what we want to focus on. So the cost before were 77 billion. And what's the cost here? 7791. Go down here, 7791. So that actually didn't change. We couldn't really decrease the costs, but we can decrease the expenses down to 40 billion, right? So before expenses were, where is it now? Where is my expense? So 32 and 7, that's like 40 billion. And we have some expenses down here, 24 billion. Net operating expense, well, that's actually negative, so that doesn't really matter. But you can see here's a major expense: selling and marketing, selling and general administrative expense, and operating expense, right? So we got these. This is probably 60, 90, 100 on. Wait, so like 100 billion, 120 billion, I think. I'm just rounding, just taking a stab at it here. So 120 billion, but we're going to reduce that down to 40 billion. All right, so from about 120 down to 40. So that is how we're boosting our revenue. So costs don't really change at all, but we're reducing our expenses considerably and thereby increasing our revenue. Okay, so this code basically maximizes EBIT, earnings before interest and taxes. You have EBIT and EBITDA, which is EBIT before interest, tax, depreciation, and amortization. We're focusing on EBIT in this case. And there's basically three key financial factors that we're looking at, or values, right? Total revenue, cost of revenue, and operating expense. And EBIT comes from this, gross profit minus equals total profit minus cost of revenue, and EBIT is gross profit minus operating expense, okay? So this is the goal to maximize EBIT or revenue. Okay, you can do either one. They're highly correlated. They're tightly bound together. But we're doing this because we're minimizing the objective function by default, right? So increasing revenue and decreasing expenses. That is the goal here. The constraints are inequalities to ensure revenue is greater than the cost of the revenue, right? Like it has to be greater. If we're losing money, we're not giving business too long. And revenue is greater than operating expense, right? So the cost of doing business, or COGS, sometimes it's called cost of goods sold. In retail, it would be more like cost of goods sold. This is cost of revenue, because Microsoft produces software. It's not really COGS per se, but it's kind of the same thing. And then operating expenses, this is total revenue has to be greater than operating expense total, and that has to be greater than operating expense. Okay, so when we set these bounds or these constraints, you see that all the time in the optimization world. Once you set these bounds, you can maximize the objective function, which is revenue, or in this case, EBIT, which is kind of a different way of measuring your revenue. I think EBIT is a little bit more relevant in this case, but you can do either one, right? So the optimized values for the cost of revenue, 77 billion. We saw that we can't really mess around with that, but operating expense, we can reduce that from about 120 billion. I think that's what that number was, down to 40. Okay, once we set these constraints, the optimizer runs and it maximizes or blows up that revenue. Cost of revenue, again, doesn't really change at all, but this decreases quite a bit, right? So this is how optimization works, okay? And this is designed to help the business determine the best financial strategy to be able to meet its targets, to control costs, to manage operations, to manage expenses more efficiently. So apparently, according to this model, the expenses are not being managed very efficiently, and it could be done better. So yeah, so there's room for improvement here. But that could also include some other things too, right? If you're reducing expenses, it could mean you're reducing your headcount or you're reducing salaries. If you want to increase your revenue, you can cut a bunch of jobs. If you lay off 10,000 people, your revenue is going to be boosted quite a bit, but a lot less work is going to be done because now you have 10,000 fewer people on your staff that are actually producing code in Microsoft case or producing some kind of value, whether it's retail or for Walmart or Starbucks or whatever the case is, right? So you have to be careful with that too. While revenue is important, optimizing profitability metrics like EBIT or EBITDA or net income is actually probably more impactful. It's probably easier to understand this than the overall revenue. The revenue is a big number, it's coming from a lot of places. But once you get down to the EBIT and the EBITDA, where you see over here, if I scroll up, I'll just go up here real quick. Here's the EBIT, earnings before interest, taxes. Depreciation amortization is added back, right? So this is a depreciation for any kind of hard assets, office locations, warehouses, um, the office where Microsoft developers sit, all these things. So all of that is depreciable, right? And you can add that back to your EBIT to get the EBITDA. And then basically, in conclusion, these metrics account for both revenue and the costs required to generate that revenue, right? There's always a COGS, there's always some kind of cost of doing business, cost of goods sold, things like that. Okay. So that's how we can maximize the EBITs. So that's it, guys. We have reached the end of this teaching lesson. Hopefully you've learned a couple of things. I learned a couple new tricks when I was putting the code together. Very interesting stuff. I like this stuff. I like it a lot. I'm really passionate about it. So hopefully my passion rubs off on you and you get acclimated to this and you're motivated by this, inspired by this type of analysis like myself. Okay, so that's very much it. Thanks for your time today, everybody. Have a wonderful day. Goodbye.